Wells Fargo Securities head of equity strategy, Chris Harvey, joins us now. What specific advice are you giving your clients as we begin the week?
What specific advice is be concerned, but don't be fearful, right? There's opportunity to open up. We could have some reverberations from what happened last week. Typically, when you enter a Fed easing cycle, it is more of a risk off, but there is opportunity there. So where it is, take it. And we're seeing good opportunity in the communication space. You did see a correction. You have good valuations, good fundamentals, you have positive momentum, and I think you can make money between here and year end in those space and in a lot of those names.
Why communication in particular? Because there were a lot of sectors beat up.
Yeah, it's a sector we've been riding for probably a year and a half, 2 years, sector we really liked. If you look at the underlying fundamentals, those fundamentals have continued to improve, but more importantly, it has good valuation, right? You're not paying through the nose for a lot of the valuations, and that's something we really like, more of a good, what you would call risk reward.
What about momentum? I know you've written about that as well, sort of bent but didn't break.
Yep.
I mean, how important does that continue to be in terms of this marketplace?
I think it's really important. One of the things we talk about is this feels like 1998, right? And similar situation where you had positive momentum, you had big caps outperforming small caps, Fed started to cut rates, and you did have a period of turmoil, but after that you did see growth, you did see momentum really get on its horse and start to move. So we do think it's very important. We do think that it's not time to go to that contrarian basket, to go to small caps, to be, very aggressive on that high risk trade. I think it's really about positive momentum, good risk reward, and things that are working.
So you weren't a believer in that rotation that we were talking about a few weeks back that obviously did whipsaw people who own the mega caps?
No, I think what we saw there was it was an exceptionally oversold type situation, just working itself out. If we look at the underlying fundamentals, they're just not strong enough at this point in time. I think a lot of people just don't trust the E. Yes, there's a big discount for small caps, but what is that E? And we're still seeing that E go down. And until we do, it's a very levered type situation. And unless you want to put on a lot of risk, it's not the place to be.
What about positioning? I've read some bullish notes this morning saying a lot of work was done on repositioning heading into September. That might be helpful.
I think that's right. I think this is now a much more balanced market. I think it's a much healthier market. One of the things that was common with 1998 is you did have a ton of leverage, and you worked out a lot of those over-levered type situation. Right, and you did see what we're saying is one of the reasons why you want to go back to communication, one of the reasons why you want to go back to momentum, it is on sale, right? Before it was very stretched, or a lot of these names are very stretched. Now it's on sale, and you can get them at much better valuations.
Yeah, I mean, I've been watching the VIX late. We only watch the VIX when it skyrockets. It went to 67 in early August. We're now below 20.
Yeah,
what does that tell you?
We look at the VIX, and I'm not really sure what happened on Monday, but the more important issue is liquidity, is credit getting to where it needs to go? And credit markets are functioning normally, right? IG credit or investment grade credit, there was more paper issued than expected last week. That's a very, very healthy sign. That's not something you saw back in 1998. And if we see the credit markets start to retract or start to dry up, then it's a problem. But right now, still pretty healthy.